it's going to be a tough task right here to be able to fill in for Larry, but we'll do our best. Here we go. The Dow is down 77 at 11,426. The S&P is down 9. The comp index is down 35. Now, see, we had the leadership from those fantastic Dow NASDAQ stocks for a very long time. Many of them are possibly making, in my work, peak F tops in their monthly chart. That turns out to be a hat-trick top if they start to come down sharply in their monthlies, because they have to be triggered by the dailies, the weeklies, and if the monthlies are an E or F and the technicals are starting to fail, that means you've got a pullback of significance. That's time and price. Now, I won't know until the month is finished, but that's the way it's starting to look. Now, let's just go to the nitty. Oh, there are a couple of other things that I want to talk about, and I'll talk about them as we move along. You've got, so because of the commodities hour, I want to go straight to gold, GCZ11. And right now, gold is down, let's see, it's down 34 at 1612. What's really important about this particular chart, and some of you might recall if you listen to my show, which is the, whoops, where did it go? Which is the Tiger Technicians Hour at Monday, Wednesday, Friday at 11 o'clock till noon Eastern Time. I had a caller a couple of times now from Friday, then again on Monday, who was looking to buy the GLD. And I said, hold off. As far as I can tell, the GLD is in a sell mode, and that could start to accelerate. And what is fascinating is that it seems to me that the government is still putting the pressure on the dollar. I know it sounds hard to believe, but they have the capacity to do. That dollar is attempting to rally. So let's go through the numbers, and I'll explain what I'm looking at. In my work, there's a very simple technique. You're going to see it over and over in the show, is that from a significant low bar, you need to count 4 peaks higher if the technicals are confirming. And you will then see that the price goes to 4 higher peaks. Depending on the length and the size of those peaks, so you can tell whether it's a major move or a minor move. In this case, gold, the gold contract, the December contract, went to $15.35 on the 26th of September. The very next day, this is the daily chart, it made a peak A at 1679.20 pullback. A few days later, went a little bit higher to 1681.50 pullback. That's peak B. Then it ran a little higher to a peak C at 1693.90. And then it made the requisite, when the technicals are in fact validating the move, a leg D and then a peak D at 1696.80. At that particular point, there was a gap and a move down the following day. And the stochastic, these are the technical, I use many. I have a Sears and Roebuck toolbox that has everything from plumb lines to stochastics and unbalanced volume and dreaded H's and drop buckets. Well, when it went to a peak D and then pulled back from the 17th of October to the 18th and went underneath the 9-period exponential moving average, that same day the stochastic, which barely touched 80%, plunged, came right down. The MACD is still positive, but today could see it turn down. If you look at the move from 1923.70, the high of the 6th of September, to the low of 1535, also in September 26th. What? Wow. Yeah, in 20 days, it's about 15 trading days. It plunged from 1923 to 1535. You will see that the pattern that we're making is, in fact, the potential for the formula and formulation that I call the dreaded H. What does that mean? It means that if the stochastic and MACD are starting to fail as the prices come down, you could make an arch formation that starts to tackle the most important low bar on the left side. And in this case, it's the low bar of the 5th of October at 5096.60, excuse me, which I'm sure it's going to take out pretty soon. If it takes it out, then the next bar is the doji of 1585 on the 29th of September. That to me is not important. What's really important, in the many techniques that I have, I developed a technique that I call the Roman candle. This Roman candle has exactly the repercussions that a real Roman candle has. When you light it, it goes and blows up. And that candle is the candle of the 26th of September, where you open at 1660, you go to a slightly higher high, 1666.30, you plummet down to 1535, and then you close as if nothing had happened at about 1594.80 in the middle part of the candle. If we start to tackle the 1580.70 to the 1579 level, that wick is bound to be filled. What's the implication? The implication is that 1573.20 is the 200-period exponential moving average, very important tool in my work. Below it here in the green line, for those of you looking at Tiger TV, Channel 1, you'll see the SMA, the smooth moving average, is at 1594, 1549, and that says you go into that particular area, and it'll both be a containment area for a while and a support area, but the chances are you're going to test 1535, which is the low of September the 26th. So that's gold. Now, what does that mean in the context of gold? It means that in the weekly chart, there's a pattern that I call the Eiffel Tower. It's where the price goes straight up, and then it comes straight down. There's also a magnificent up channel that's been going on for a very long time in the weekly chart, and the weekly chart is the gold December contract. If you look at the continuous contract, I can't go there for at the moment. If you look at the GLD on a weekly basis, you will see that that up channel has been going for a very long time, and now we are going to go into the up channel support area, and that up channel support is right there. The same dreaded H is happening in the weekly chart. Let me expand a little bit and you'll see. So that's very important. Aha, wait a minute, that's just the weekly. I always look at multiple time frames. I show my subscribers to my opening call, my daily service every day. Well, it turns out that this could, in fact, I'm pretty sure this is going to be a peak F top in the monthly gold contract. If that is the case, even though the stochastic's holding, the stochastic slipped under 80%, to 79% here, and the MACD is holding very well, it says there could be counter-trend rallies at any point. But the high of 1923.70 on the contract itself, it's going to be really tough to get there, and we're going to take time and price. Now I think it's more time at this particular point than price, because the acceleration could give you an ABC to the downside. That's not peak A or trough A. That's just that lightning rod ABC. But there should be a propeller shaft containment area in this range that I've been talking about. So that's going to be very important. Now, let's go on. Let's look at, I'm going to look at copper. Yep, I'm going to do that right now, HGZ. And as I look at copper, we'll be going to our first caller. We have got Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Good to talk with you.
Good to speak with you.
My question is on COO, Cooper Industries. I think it has a lot of your techniques.
Certainly that dreaded H we're talking about, right?
Yeah, it's got the, on the daily it's under the moving averages. On the weekly, the MACD is repelling down and the Stoke is turning down. My question is, should I short? I have a short position. I want to know if I should short some more here.
So let me just see. This is Cooper Companies. It's actually called. The COO is Cooper Companies, right?
Yes.
Okay.
They make
I have a very good chance here that this is making a peak F top in the monthly chart. Let me just double check that I don't think I've missed it.
I have
what
a
is
D
that?
in the monthly, but
38.99 and 38.90. Yep, that's it. So this is, oops, oh no. So this is actually a G. Let me just do this again. C, D, A, B, C, D. Ah, no, it's even better. There were two buy modes, right? In the monthly chart.
Right.
Okay, so this is two peak Ds. Let me explain, folks. Remember, in the Chapman wave, we go to a peak D, and then you can expect a pullback of some significance. Well, this is A, B, C, and the final peak D is right there. Yes, I think this is making, I have to tell you, there are just too many stocks starting to make.
I think I have a D, like a 2D modes.
Yes, that's exactly right. Now, the monthly chart and the weekly chart says that we are about to tackle the left side low bar that I was talking about, also a Roman candle from the week of the 12th of August at 62.77. The low today is 64.02. So 62.77 would be my first target. Oh, are you already short?
Oh yeah, I'm short, but I want.
And the daily with A, B, C, D, E, F. So the daily made a peak F. Oh, this is a perfect example. Thank you for bringing it up. Now, I'm going to do this real quickly because A, B, C, D, E, F. So this could be another one of those hat-trick tops. This is serious stuff. So I must say that when I look at charts like this, even though I thought there'd be a counter trend rally that could go to one more nominal high, I'm looking at this and saying, there you go. Okay, I've just done the measurements for this. The price that I'm looking at is 62.77, the low of the 9th of August. When it gets there, or when it just passes, you've got to expect that there could be a rebound. That rebound could quite easily take it back to about 64.80 to 65.40, or even a tad higher. So, you know what? Hold on a second. I'm going to do a little bit more work with this, although it's not a commodity per se. What do they do?
They sell contact lenses.
Good. Yeah. Okay. I'll be right back. We're looking at Basil Chapman. This is Larry Pesavento's.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. Your free eye loop and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento, and it's my pleasure to be here. My normal time is Monday, Wednesday, Friday, 11 o'clock till 12. And in fact, I always discuss on my show copper, gold, bonds, etc. So I do some of the commodities and the dollar and the euro. And right now we're looking at Cooper Industries, COO is the symbol. It's down $3 at 64. And Mike has it as a short, and I'm going to say to him that I think you've got a perfect stock. This, in fact, could turn out to be a much longer term short position, but I'm also going to recommend to you that if it goes to anywhere between 63 and 62.50, at that point, some of your position, I would consider lowering the stop on that, especially if it gets the 200% extension, which I like as a Fibonacci number between 200 and that. Once it starts to expand, that's when it can actually accelerate. But if it stops dead at about 61.50 to 61, it could bounce very quickly back into the arch. So that's where I would, some part of your position, I would tighten the stop, and I would exit that position, and I'd be ready to put it on, especially if there's just a huge bounce that can take it back to about the 67 to 69 area where the 200-period moving average is, because that's going to be tremendous resistance. So I hope that helps you.
Yeah, it was great. I really enjoyed the seminar, and I highly recommend it to anyone else.
Oh, thank you very much. And you had one outstanding short, as I remember it, GMCR?
Right. Green Mountain, right, GMCR.
Green Mountain, congratulations. You did fantastic work on that, and a worthy short, and congratulations. Thanks so much for calling, Mike. Let's go to Richard in Minneapolis. Hi, Richard.
Basil?
Yes.
Yeah, I'm calling. I'm looking for maybe an intermediate weekly or monthly viewpoint of the UUP.
Okay, folks.
Dollar on the UUP version.
Do you have any position at all?
I do not.
Okay. Then this is something I'm going to recommend a very small position in the UUP, and I'll explain why I say a small position. Because with all the selling that's going on, with the gold dropping so sharply, the dollar, folks, we're talking about the UUP, which is the Power Shares DB US Dollar Fund, and the dollar is rallying, but you know that even with all this, it has, by the end of the day, it certainly could. But at this moment, it hasn't taken the 77.55 high of the 18th of October. But I do believe that this 200 period moving, for those of you who are new to my work, I'll explain to you, if you're looking at the charts, either in the Dan or you're on Tiger TV, this particular line here, this mauve thick line, that's the 200 EMA. The green line that you can just see barely over there, that's the 200 simple moving average, which the majority of fund managers use. I don't like that one at all, except for other purposes. The EMA is the one that hugs the price much better. Look how it's telling a much better story than the SMA. Well, this dollar, if you want to start a small position, now I tell you why I say small position. Because although the dollar should rally, there's something going on with the government. They are still trying to keep that dollar down. And so I would say to you, you start a position right here at 77.48. The stop that I would have, I would say a small position because the stop is at about 76.40. So you can have a $1 stop, because if it goes underneath there, that's that dreaded H, and it's going to go all the way down to the 200 period moving SMA, which is at 75.85. Now let me explain something else that's going on, and I'm going to use this opportunity because this is a commodities hour, and it's a great call, and I'm going to do a bunch of things, and I'll explain what I'm looking at. If you look at the dollar right now, it's gone in the 120-minute chart. It's gone A, B, and it's just starting next C. And there's that 200-period moving average, which was just fantastic. Look at the resistance that it was in the 120-minute chart since October, since about October the 10th, October the 11th. So now it's telling you if it can hold above it, the dollar will be going higher. There's a lot going on in this particular market, and it's very complex because there are some stocks that are moving. We actually went long a particular stock this morning. Hey, the day's young; it could easily turn around, but it's already up 3%, and the short that we have is down. So this is a market where you have to be very selective. Now, what I'm going to say to you is this, and I'm going to do a bunch of work if you don't mind, and I'm going to show you why I'm going to give verification to what I'm saying. Hold on, Richard. We'll be right back. This is Basil Chapman sitting for Larry Pesavento. Dow's down 95, S&P's down
10. Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, everyone. We are back. This is Basil Chapman sitting in for Larry Pesavento. Larry will be back. I believe Larry will be back on Monday. So we are on with Richard right now from Minneapolis, and he wanted to know about the UUP, which is the trading vehicle, one of the lousy trading vehicles, ETF for the dollar, but it's the best one we've got. And my recommendation was that in the UUP, which trading now at UUP, trading now at 24.84. You see how lousy it is. Look, the dollar is actually much stronger. And yet the UUP is kind of lagging. The dollar's almost, the index has almost made its leg be up over 77.55, and the UUP is lagging. However, it is the vehicle that we have. Now, let me explain something. In my Dow, S&P, and even the Qs, let me double check on the Qs right now. Yeah, even my Qs, the QQQ Trust Power Shares, as well as the, since it's the futures hour, as well as the NQ, the NZQ. NASDAQ futures, no, it was wrong. NQZ, 11. There you go. The stochastic and the MACD are still very strong. So I believe that the pressure that we have right now, yes, it is based on the NASDAQ stocks, but in the Dow, etc., there was some nice action going on. And it seems to me if there was even just a hint of something positive overseas, we could certainly see a really quick spike to the upside. It is after that spike that I wanted to start looking at the downside, the short side. And I could be wrong because there's something else that's going on that is really, and this goes to the exact issue of the dollar. There's something that's very important, and this is the pattern of those M's that we made. We made those little MMM. We made them in the Dow from the low of the 9th of August at 10,600 for 4 of them. Then they went to a lower low. That made a much larger H formation. That H formation says you can rally, but because you went below, you shouldn't take out the high of 11,712. But the stochastic and the MACD, this is the longest that they've remained at 88% in the stochastic, and the MACD is still positive. There could be a real quick sudden spike to the upside. It is after that that I will be assessing whether or not we are now going back to my monthly charts, which is say in so many areas that there could be a major top formed and that this is a counter-trend rally. So that's my reasoning, saying if you've got a small position of the UUP now, I would say to you, hold that position. If the Dow takes out 11,200, closes under that, that UUP is going to really climb. So I would say to you, small position. If the UUP goes above 2192, doesn't sound like much, but for this darn thing, that is big. Today was 2190, even with all the selling so far. If it goes above 2192, add another small position. And the second one will have a little bit of a tighter stop. So I hope that helps you.
Okay, I appreciate that. I would just mention, though, that the options do trade, of course, a little bit better, a little bit better than the stock does.
Oh, absolutely. You know, I've not followed the options. In fact, that's probably the better way to trade it because it'll have the sentiment of the dollar at a greater dynamic than the UUP. Hey, are you doing it on the UUP, options on the UUP, or on the dollar itself?
UUP.
Yeah, okay, I think that's a good way to play it. Now, if you're playing options, it's a completely separate story altogether. What I would then say to you is that the moment you cross the 2191 area, any option that you have should make sure that you've got a very tight stop because you know how quickly those can diminish in premium, right?
That's correct.
Thank you very much for calling, Richard. I hope it helps you. I am going to go after this. I'm going to go through to the euro, etc., and copper. Thanks for calling, Richard. Basil Chapman, Dow's down 82, S&P's down 8. I'll be right back. 877-927-6648.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yeah, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, everyone. This is Basil Chapman. I'm doing the soybean chart right now. Soybean monthly. Look at the pattern. If you learn about the Chapman wave, you will find out that, yes, that's correct, that it may, from December of 2001, went to a peak D in the monthly, 4 peaks higher at 860 and a half in April of 2004. Pull back, went to another peak D, and then pulled back, but made a slightly higher peak E, but at least the D got you out in time, and that high was in June of 2008 at 1303 and a half. Now, this is continuous, so the prices, the time is exact, the prices will change. Then it went to a peak D and pulled back in December of 2009 from the low of December of 08 at 471. Pulled back, held the 9-period exponential moving average, went to an E and an F in the pattern that I teach in my Master Trader series. It's called the camel hump. It's the double M-shaped pattern in the stochastic and the MACD. Lo and behold, we've got a peak F in soybeans. You know, this is serious stuff. I looked at the DBA again. I always look at the DBA. DBA has made a peak C and is failing at a peak C. The monthly charts, DBC, and DBC, of course, has the, I believe it has all the information that you need. It has the gasoline, the oil. What else does it have? DBC, I think it has, heating oil, gasoline, crude, Brent crude, natural gas, gold, silver, aluminum, zinc, copper. Look at this copper chart at HG. I'm going to get to the euro in a minute. The euro, look, peak D top at 4.6675. I've been warning about this. I said if it plunges and it breaks underneath the high of 3.65, that was the high of April the 10th, that's going to be very negative because there's a chance you're going to get that H pattern that takes you down to the 2.83 area of June of 2010. This is really important stuff that we're going through right now. So any rallies have to be called counter-trend rallies. Now let's go to the EUR-USD. Now, folks, I go through many of these charts in my show, Monday, Wednesday, Friday. I go through these because I look at anything that moves, I can do a chart on. I don't even need the technicals because the Chapman wave ABC is really very important. Now, the euro has made a peak C, but what's very important, two things are important. One is the high of 1.393 back on the 15th of September has been just taken out. 1.391. Oh, it hasn't. No, it hasn't been taken out. And that's really important because what does it say? It says in this H pattern, if you go to a lower low, which it did, the copper, the euro went to, this is the EUR-USD, this is the currency pairs. It went to 1.32596 on, I hate all those numbers, let's call it 1.32. Back on the 5th of October, it ran to peak A, B, C. Now, it can fail, and that's the thing I have to keep in mind. With the Dow as well, in this chart formation, you can, when you have got a larger arch, you can fail if you are underneath the previous high of 11,712 in the Dow. So if we close at any point above 11,712, that's really important because you're going to turn this into support. Now, there's another pattern that I look at because I'm looking at the stochastic and the MACD still being so strong. There's a pattern that I call the Chapman wave stalk leg. I'm going to show it to you here in the SPY. I could do it. It doesn't work so well on the futures, but I'll show it to you in the SPY. The SPY ran from the 4th of October at 107.43 in the 120-minute chart all the way to peak F, which is a very serious top, usually at 122.12 14 on the 12th of October. Then it went to a congestion area and it went to a peak D. So the oval pattern, here's your leg, strong leg up. Then you make the oval pattern I call the body. Then you make the neck. I'm going to expand this so you can see it better. Then you break above the previous peak of 122.60 for the neck. And then you form the head, 123.50 on the 18th. That's 2 days ago. And now you're forming the head. And this is the beak. The beak says that 119.52 to 119.20 is going to be really important. You break below that, and then the SPY, that's the S&P, this is the S&P depository receipts, will go lower. If I look at the E-minis, the E-mini 120-minute chart, there's this pattern of pince nez. What do they call them? You know, those in the old movies, Sherlock Holmes and stuff, they have those glasses from the old days that they used to, there were no arms to the side. It was just the glasses that hung on the nose. This is what it looks like right here in the E-mini 120-minute chart. So it's really important. If we take out the low of today, 1192.50, then the target will be 1183.50, the 200-period exponential moving average, because it'll probably take out 1185.50, which was the very critical low of just the other day on the 18th of October, and 118.25, the low of the 13th of October. So I'm looking at all of these different things because it is really important, since the volatility index, the VIX, is climbing like it is. It's gone to this leg B in the 120-minute chart. It's going to bump into a tremendous amount of resistance between 37.82 and at the high today is 36.87. So between here and 37.82, that should be a lot of resistance. A lot's going on overseas. You can see that opera glasses. Thank you, Danny. You can see that this is very important, and you can see in the chart that I'm showing here. This is a 120-minute Dow, and this is what I was talking about the other day. That there are times that the mirror image of the volatility index and the mirror image of the 120-minute Dow, although it's based on the S&P futures, it works just fantastically with the. I've done this for 20 years at least, the volatility index against the Dow. Look how you've got, I have to consider that the cup formation in the volatility index and the arch formation, if the Dow takes out the low of 11,296, can very quickly go to 11,231, the 200-period exponential moving average. That'll push the volatility index back to about 41 to 43. So I've got to watch that very closely, regardless of what my technical indicators are saying. As you can see here on the S&P, with all the selling, the stochastic's still at 89%. Basil Chapman sitting in for Larry Pesavento. It's my pleasure. I'm going to go through lumber and some other contracts, crude oil, bonds. We haven't even spoken about bonds. I'll be right back straight after these messages. Oh, this is fun. Commodities.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system. Before October 31st, you will receive in excess of $300 in trading education. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. I can't believe how quickly time's flying. Now, the couple of things I want to talk about. Tom has launched this fantastic program today. It's a 30% match. If you sign up at Tiger TFN for Tiger Dollars for $250 or more by October the 31st, you get 30% off. Now, I know the last time we did this, it was really successful. I know certainly for me, my subscribers really latched on, and they just took advantage of it. They also bought a lot because they know that I give Master Trader Series. I had the live Master Trader Series just recently. I've been asked if I would do another one. I'm thinking about it. I'm thinking the end of November, or sometime in November, maybe beginning of December. I'm just going to work on it this weekend to see when I can do it. So this is just a fantastic time to build up your Tiger Dollar Kitty for the fantastic things we have here at TFNN. 30% match. That's fantastic. You sign up, go to the front page, sign up. Now, the lumber contract, the reason why I was going to go long a home builder yesterday, but I made the buy point much lower than it was trading at, and it was one of the very best. And then it missed by 3 cents, and today I decided I will not go there. I'm not going there right now until I get some validity in this thesis that I have, that we got another pop-up to go before we start to come down. And if that pop-up holds and the Dow gets above 11,750, we can hold for a longer period on the upside before coming back down again. So look at the lumber contract. This is a monthly contract. If you use one technical tool, folks, use the 9 EMA, the 9-period exponential moving average, and you can put the 200, which is 191 periods longer. Actually, 2 major ones. Look, that night, the lumber, when it broke down in May of 2006. Not once did it close above the 9-period exponential moving average until November of 2009. It went all the way down from the 800s, 893, down to, well, where it is today at 211, 215. So lumber is telling us that this home building is a serious thing. It's going to take a long, long time for them to get back on track. That's what I believe anyway, reading this lumber chart. Now, I said I'd get to the bonds. USZ. Bonds, you see, bonds are not rallying sharply. They've had a fantastic move. And I would conjecture that as far as bonds are concerned, bonds are taking a well-earned rest. And they are telling me that if bonds are able to hold here and have a high-level consolidation, when we finally do get that big move to the downside, I think this is more European noise that's interfering with us. There were signs that the market really wanted to rally. So I did not want to get short other than specific stock. And that's the reason why I'm looking at the market as I am. And bonds have made a peak D in the monthly, very long-term chart. And at 139, 1930 seconds on continuous contract, it is still up in the up channel resistance area. And the MACD is still at 83%, and the MACD is still expanding. I would not rule bonds out, because my thesis for a long time has been, for 10 years or more, the Japanization of our bond yields, where the government is forced to keep rates low, is going to continue. Folks, I'll be back tomorrow. I will actually continue this theme if you want. Tomorrow at 11 o'clock, please go to the front page of TFNN. Check it out. My service is the opening call, but check out those Tiger dollars. It's really, it's important to us. It's even more important to you. And let's just do this real quickly as we're going out, because who's coming after me? No, nobody after me on a Thursday. But later on, we're going to get, I believe, Ken Shreve, fabulous program, Ken Shreve, then Tom O'Brien. Look at the Dow holding above the 9-period exponential moving average. The stochastic and MACD are still good. I still hold out that we can have a pop-up, a sharp pop-up to leg D at 11,641. I'll be back tomorrow and I'll talk about it. Thanks for being here, and thank you, Larry, for allowing me to